Hello again everyone, I hope you are all doing well. So yesterday I really thought about doing my trading update on this deal, that being Square announcing intentions to purchase Australian buy now pay later company Afterpay. However, I did want to see how the market reacted to the Square stock in light of this news. The story in a nutshell is that online payments giant Square will acquire the Australian listed Afterpay by issuing stock to Afterpay holders at a ratio of 0.375 Square shares for every Afterpay share. The deal will also make Square dual listed and will likely have approximately $29 billion worth of stock listed on the Australian Stock Exchange as a result of this. To me, I own shares in both companies, so I'm really intrigued by this deal. With this video, I want to briefly have a look at the nature of this deal, what has been happening with both companies in terms of trading activities through a very minor technical analysis, and also discuss a unique trading opportunity that potentially exists because of this deal. But before I do that, I want to quickly mention something that I would not normally say until towards the end of the video, but I think is worth mentioning now, as viewers tend to drop off partway through videos. That is that I have announced that I'm planning on setting up my channel as a social enterprise going forward, with the idea being if and when it does become monetized, I want to move profits towards some causes which I'm passionate about. So by following the channel and watching videos on it, people are helping make a difference at no financial cost to themselves. I think it's a really good opportunity to use YouTube for good and to make a difference to some causes which I feel passionate about. So I encourage you to subscribe and be a part of all that. With that out of the way, let's get into the Square and Afterpay deal and look at this unique trading opportunity that may be presented because of this deal. To start with, let's have a look at the two stocks. Keep in mind that they are expressed in their home currencies, Australian dollars and US dollars respectively. The first chart is a daily chart of the performance of Afterpay stock and is a really good expression of the journey of the buy now pay later scene. So keep in mind that currently Afterpay is one of the two largest buy now pay later companies in the world, along with the Swedish firm Klarna. It is a relatively new fintech industry, but Afterpay is generally considered as one of the first major movers, and that is reflected in the growth in size the company has amassed in its short history. Given the relative new space Afterpay operated in, their stock got hammered during the peak of the pandemic stock crash, falling to less than $8 Australian at its lowest point. Just prior to that, the stock had started to expand into America, and when news got out of how many users were starting to use the platform, Afterpay and other buy now pay later companies saw a crazy ride. Afterpay shot up as high as $160 in August from its lows. Given the success and the rapid growth the industry was seeing, some larger companies in America started to cotton on and take notice and made announcements to enter this space. That included PayPal in August and Apple Pay just a few weeks ago, both to which the Afterpay stock and other buy now pay later stocks globally reacted negatively to this news. Given the scale that Square will be able to help add to Afterpay, the excitement for the deal has seen a sharp recovery in their stock price so far this week. Now, moving on to look at Square, we see a very similar recovery story from the lows of the pandemic. Both platforms saw a strong increase in their uptake, with the increasing onset of people shopping at line at home due to being locked in at home. The pandemic really was a godsend for the fintech sector. The scale of Square's growth since the pandemic crash, while still impressive by increasing almost by 10 times from bottom to peak, pales in comparison to Afterpay. Afterpay managed to see a 25x return to their stock price by the same measurement of bottom to peak. This probably partially reflects the allure for Square to acquire the company and to ready themselves to compete with online payment rivals PayPal and Apple Pay in this space. Lately, Square has seen a boost to their stock with their announcement of accepting Bitcoin and potentially other cryptocurrencies on their platform. CEO Jack Dorsey has made it no secret that he is a huge fan of cryptocurrencies, and to me at least, he is probably the next most influential big tech player for cryptocurrencies behind Elon Musk. The last large green column on this graph reflects the strong market reaction to Square acquiring Afterpay, with yesterday's trade almost reaching the all-time high mark for the stock, something that may even be achieved in today's session if the continued enthusiasm that we saw with Afterpay occurs for Square. Now, to understand the deal, there is an extra level of complexity, as it is being done across two countries, therefore it involves two currencies, and therefore has exchange rate considerations. So the two parties have agreed on an all-scrip deal. This deal will see Afterpay shareholders receive a fixed exchange ratio of 0.375 shares of Square Class A common stock for each Afterpay share they own on the record date. The plans are for the deal to be fully finalised in the early stages of 2022. Of course, this can still be rejected by Afterpay shareholders, but the deal does have the unanimous support of the Afterpay board. Based on the Friday Square share price of US $247.26, this implies a transaction price of approximately $126.21 per Afterpay share. Given that the Afterpay share was trading around the $100 mark on Friday, this is the catalyst for why there has been such a big jump in its stock price since this deal was announced. The overall values of this deal are approximately US 29 billion or Australian $39 billion. Amongst all this, what this potentially means is there are some potential trading opportunities based on buying and selling shares in relation to the fluctuations of the other. How this works is fairly simple. Because Square intends on allocating 0.375 shares in its company for every single stock of Afterpay, we can easily detect moments when the ratio is out of sync, and it's more common than you think, thus representing a potential buying opportunity for these stocks. To do this, you express both ratios in the same currency and multiply the currency by 0.375. If the resulting figure is higher than the Afterpay price, it is potentially a good opportunity to buy Afterpay as it is undervalued in relation to Square. If the resulting figure is lower than the Afterpay price, it is a good opportunity to buy Square as it would be undervalued in relation to Afterpay. Let's quickly work through the current pricing scenario, which is after the Australian trading session finished on Tuesday and before the US session opens on Tuesday the 3rd of August. So I'll work through an example of how to track which stock is undervalued. I'll do the conversion into US dollars. However, it works mechanically the same way if you were to do the currency conversion into Australian dollars. So we start off with our prices in their home currency, so $127.85 Australian for Afterpay and $272.38 US dollars for Square. So by using currency converter, we can see that the Afterpay price is worth $94.47 US dollars and the $272.38 is still the same. What we then do is multiply the Square price by 0.375, the percentage of Square stock that it will be given for every Afterpay stock. So 272.38 times 0.375 gives us $102.14. That figure is higher than the $94.47 US dollars that the Afterpay price is worth. What this means is that Afterpay stock is undervalued in relation to Square by 9.25%. So given the outcome that Afterpay stock is undervalued in relation to Square, this can indicate two things theoretically. Either that Square will see a price correction to align with Afterpay, or Afterpay will rise to match Square's paired weighted value, or there could be a combination of the movements which sees them meet in between. It's a pretty simple concept, really. However, while all of this makes sense in theory, stock markets are not totally rational systems in the way they behave. Both stocks can be affected by wider macro trading events in their own regions. When calculating your entry and exit points for trades, if you do incorporate this method, it is worth understanding what sort of effect currency conversion or exchange rates may have on your trading. It is not uncommon to see as much as 1% each way being charged on a trade. So this probably works better if you carry both currencies in your portfolio, or at least intend to do so going forward, as it minimizes your currency expense. However, in saying that, currency fluctuations can have added risk and return impacts by either enlarging or shrinking your gains in your nominated home currency. So be aware of that. Also, now that the companies have an implied link through Square's intention to acquire Afterpay, both stocks are linked to the other's fortunes and misfortunes, so drastic news from one will likely impact the other stock's performance. And of course, while it is looking very likely to go ahead and be a merged company with a dual Square listing on the ASX and the New York Stock Exchange, like we said earlier, there is still the possibility that the deal does not go ahead if shareholders take the unlikely action and vote against the deal, or of course it could still fall apart on its own merits at any point in time. But at this stage, it all looks like it will go ahead. As an investor of both stocks, I'm quite excited by the merger, or I should say acquisition. I also like the idea of being able to hold Square in my native currency. The dual listing potentially provides more mathematical opportunities to capture value when you compare the two listings through the lens of exchange rates and varying investment activity in their respective markets. For Square, I really think this helps further cement the company as a major player in the new world of online and digital payments. The Afterpay acquisition gives them instant access to existing scale in one of the hottest digital payment sectors at the moment, which still has such a massive potential addressable market both in the United States and overseas. Square has already announced that they intend to keep Nick Molnar and Anthony Eisen to continue to guide the future expansion of Afterpay. after all, they will become significant shareholders in Square as a result, so they will likely want to keep furthering the success of their creation. Anyway, what do you guys think? Is this now a good opportunity to buy Square or Afterpay stock? What does this say about the buy now pay later industry and the future of digital payments? Let me know in the comments below. If you found this video interesting or useful, I would encourage you to leave a like on it. Also, if you want to see more Square or other stock related content, I would encourage you to subscribe to the channel if you have not done so already. As I said at the start, I'm trying to build the channel into a social enterprise and therefore making the people's viewing of my channel something that can have wider social benefits. So I'd encourage you to join up and be a part of that. Anyway, everyone, thanks for watching. I will see you all next time. May the markets trade in your favor. Cheers.